Hey there, Georgia retirees. You've worked hard your whole life to build up that IRA. But when you go to take money out, have you ever wondered, how much of this is actually mine to keep? Well, today we're going to break down exactly how IRA withdrawal taxes work in Georgia for 2025, and most importantly, how you can hold on to more of your hard-earned cash. So here's our game plan. First, we'll look at the tax bite itself, what it looks like in real dollars. Then we'll dig into why it's taxed that way. After that, we'll navigate the key rules you've got to know, uncover a huge Georgia-specific tax break, and wrap up with some smart strategies for your withdrawals. All right, Section 1, the IRA withdrawal tax bite. Let's not beat around the bush. When you pull money from your IRA, what's the real number that actually lands in your bank account? Let's just start with a number. $36,405. Kind of specific, right? Just let that number hang in the air for a second. Because what if I told you that from a $50,000 IRA withdrawal, this is all you might get to keep? It's a bit of a shock, I know. But this really gets to the heart of the problem we're going to solve today. So here's how that scary number happens. You start with your 50 grand withdrawal, but then Uncle Sam comes calling. In this example, if you're in the 22% federal bracket, that's $11,000 gone, right off the top. Then the state of Georgia takes its cut, another $2,595, and boom, you're left with just over 36 grand. That's a huge chunk of your money that never even makes it to your pocket. So why? Why does this happen? That brings us right to our second section, where we'll pull back the curtain on how your withdrawal is taxed. You've got to understand the two layers of taxation that are at play here. Okay, here is the most important thing to get your head around. Taking money out of your traditional IRA is not like transferring money from savings to checking. No. To the government, both federal and state, that withdrawal looks just like a paycheck. It's considered income, and they're going to tax it just like income. And this is a really, really critical distinction. Your IRA money is taxed as ordinary income, where federal rates can go all the way up to 37%. It's not taxed at those lower capital gains rates that you hear about when you sell stocks in a regular brokerage account. That difference right there is why the tax hit feels so big. So, to spell it out for 2025, you're getting hit with two separate taxes. First, there's the federal income tax, which all depends on your total income for the year. And second, you've got Georgia's state income tax, which is a flat 5.19%. Now, this leads me to a super important practical tip. Please listen to this. To avoid a massive tax bill surprise come April, you need to have taxes withheld at the time of the withdrawal. A good rule of thumb is to set aside at least 10 to 20% for federal and another 5 to 6% for Georgia. Do this, and you'll thank yourself later. Okay, on to Section 3. Let's talk about navigating the key rules. These are the non-negotiables of the IRA world. Things like age, penalties, and those mandatory distributions. This little table sums it up pretty nicely. See that age? 59.5? That's the magic number. Touch your IRA money before then, and you're not only paying the regular income tax, but you're also getting slapped with a painful 10% penalty. Ouch. Once you're past that age, the penalty goes away. But remember, the withdrawal is still fully taxable. And what about these RMDs you hear about? Well, think of it this way. The IRS lets your money grow tax-deferred for decades. And now, the party's over. Starting at age 73, they force you to start taking money out each year, whether you need it or not, basically so they can finally get their tax revenue. And trust me, they are not kidding around with this rule. If you forget or fail to take out your full RMD for the year, the penalty is a jaw-dropping 25% on whatever amount you missed. That is a brutal, costly mistake you absolutely want to avoid. Okay, enough with the penalties and taxes. It's not all bad news. In fact, this brings us to what might just be a total game changer for you. Let's talk about a key Georgia tax break. This is huge. $65,000. If you're a retiree in Georgia, you need to burn this number into your brain. So what is it? This is the Georgia retirement exclusion. If you are 65 or older, you can exclude up to $65,000 of your retirement income. And yes, that includes your IRA withdrawals from your Georgia state taxes. And get this, it's per person. So for a married couple, that's potentially $130,000 of income that Georgia won't touch. So let's go back to our first example. Remember that sad $36,000 number? Well, look what happens when we apply this Georgia exclusion. Because our $50,000 withdrawal is under the $65,000 limit, the Georgia state tax of nearly $2,600 is completely wiped out. That's money that goes directly back in your pocket. Knowing the rules is one thing, but playing the game smart is another. This brings us to our final section, smarter ways to withdraw. This is about moving from playing defense to playing offense with your taxes. We won't do a deep dive here, but I want to plant some seeds. Things like Roth conversions let you pay some tax now for tax-free growth and withdrawals later. If you're charitable, a qualified charitable distribution lets you give directly from your IRA, satisfying your MRD without adding a dime to your income. Simply staggering big withdrawals over a couple of years can keep you in a lower tax bracket. It's all about being proactive. Now, this all leads to a really important question. While planning is good for everybody, for some folks, it is absolutely critical. So, who are these people? You have to be extra careful if you're in one of these situations. A big unplanned withdrawal can easily push a high earner into a much higher tax bracket. For retirees on the ACA, it can completely blow up your eligibility for health insurance subsidies. And if you inherit an IRA, a lack of planning can trigger a massive and often unexpected tax bomb. So let's wrap this all up with a simple checklist for 2025. Number 1, remember, your withdrawals are taxed as regular income. 2, always set up tax withholding. 3, if you're over 65, that Georgia retirement exclusion is your absolute best friend. And 4, do not get surprised by those mandatory RMDs after you turn 73. I'll leave you with this final thought. You spent your entire career, a lifetime, building up this nest egg. The real question now is, are you going to put a plan in place to protect it from a lifetime of taxes? Because thinking about that today can make a world of difference for your retirement tomorrow.